Crispr was just bought by multiple Wall Street firms. So we see that State Street increased exposure by 15% over the past quarter. We also saw T. Rowe Price increase exposure. We saw Vanguard with some slight buying. So what I'll do in this video is I'll go over the most recent changes in terms of institutional shareholders. I'll go over the Wall Street analyst ratings, which are all bullish, believe it or not. And then I will cover short interest, and I will give you a price prediction at the end of the video for this stock. So with that being said, let's talk about it here. So State Street, as I said, increased exposure by 15%. We saw T. Rowe increase exposure. We saw Vanguard increase exposure. One thing that I did see that was kind of notable is we saw ARK Invest sell about 2%. They've seen a good amount of outflows, so I don't see that as company specific. Outflows meaning that ARK's investable capital has dropped as investors have pulled money. Therefore, it's not really a sell based on Crispr stock having a huge change in its business or anything like that. So I don't see the selling within ARK Invest concerning at all. And then we saw a slight selling from BlackRock, roughly flat, which I honestly see as bullish because they sold 0.2% of their shares. So the stock had gone up over the quarter. So how a passive indexer works is, as shares increase in value, they'll likely right size their portfolio and sell down some. The fact that they only sold 0.2% of shares is honestly bullish in my view. So with that being said, it's good to see that institutional shareholders are still quite bullish on this stock. And then really, when we take a look at Wall Street, we're 17-1 in terms of bulls to bears. So Wall Street is overwhelmingly bullish on this stock. So we can see that there are 17 different bullish ratings on Wall Street for Crispr, and there's only one bearish rating for this stock on Wall Street. That definitely shows you general consensus on Wall Street is a bullish one for the stock, which is obviously a bullish, positive catalyst for this company. And then with that being said, let's take a look at the most recent analyst ratings changes. So we can see here that Morgan Stanley maintained their underweight rating just about a week ago and reiterated that $42 price target. So Morgan Stanley is the only bear on Wall Street. They're sticking to it. They actually lowered their price target just a week ago. So that's kind of the most recent change in terms of Wall Street analyst ratings. But with that being said, let's take a look at the short interest for this stock. So we can see that short interest right now, we have 17% of the float sold short. We have about 3.25 days to cover. For those that don't know, days to cover just tells you the amount of days of average volume it would take to cover the shares sold short. So this would take about 3.2 days of average volume to cover the shares that they're sold short. And Fintel, which is this website I'm on right now, thinks that this stock has a high likelihood of a short squeeze. In fact, this stock ranks out within the top 16% of stocks that have a high likelihood of a short squeeze. So that tells you that Fintel is suggesting this stock has a high likelihood of a short squeeze. And with that being said, let's take a look at the failure to deliver numbers. This kind of tells you the amount of shares that are failing to deliver. All that means is that short sellers are not actually delivering back these shares. All you really need to know here is that within the next 60 days, there needs to be 35,000 shares bought by short sellers, or the SEC will come after those short sellers. So 35,000 shares will be bought by short sellers over the next 60 days. And this is the highest failure to deliver number that we've seen since October of last year. So this is another signal of a high likelihood of a short squeeze. So good to see that there. And then I found this very interesting. So the number one meme stock ranking, the stock with number one meme stock ranking is Crispr right now. So this takes into consideration the failure to deliver numbers and also the Wall Street bet score, which is just basically social media mentions. So the stock is being mentioned very commonly across social media. It also has a high failure to deliver score. Therefore, this stock is ranking very high in terms of meme stock rankings, according to QuantQuiver. And then over the past couple quarters, we had seen some insider selling from this company. So over the past couple quarters, we saw some selling. So in Q2, we saw 50,000 shares sold. In Q1, we saw 75,000 shares sold. We haven't seen any insider selling this quarter so far, so definitely good to see that the insider selling has tapered off a bit. Um, don't think it's too shocking to see some selling here. The stock is up drastically from its 2016 IPO price of $16. So likely some investors, or I shouldn't say investors, or likely some employees, some C-suite members, kind of just taking profits and really just looking to lock in their wealth, if you will. So don't think that's too concerning, but I did want to bring it up at least. And then obviously we had this great news event. So the UK approved the first worldwide, or excuse me, the first sickle cell gene editing therapy from Vertex Crispr. So this is the first approval of its kind. Major news for the gene editing space, and obviously huge news for Crispr, which is pretty much the leading gene editing company. And just to kind of read this out, so the UK's Medicines and Health Products Regulatory Agency has approved this therapy, which is obviously gene editing therapy developed by CRISPR for sickle cell disease. The drug will be marketed in the UK for treatment of sickle cell disease in patients 12 years or older. This marks the first regulatory approval of a CRISPR-based gene editing therapy in the entire world. So this is huge news for the company. The stock was obviously up a bunch last week, rightfully so. And then Vertex's CEO said, "Today is a historical day in science and medicine. This authorization is the first regulatory authorization of CRISPR-based therapy in the world." This is huge news, guys. This is a great development for this company, which unfortunately has been plagued by regulation. It's just a company that hasn't been able to kind of move things forward just because regulation. And so the first regulatory approval is a huge deal for this company. But with that being said, let's take a look at the financials quickly for this stock. So right now, we obviously don't have a positive PE. We aren't making money, but we do have a price to book ratio of 3.3. For those that don't know, that basically tells you that the market cap is 3.3 times the book value of this company. Book value just being, assets on this balance sheet. So decent number there. And this is actually below its 5-year average of 4 times. So on a price to book basis, the company is trading cheaper than it has over the past 5 years. On a revenue growth basis, revenue growth looks awesome. So we have 1,100% revenue growth over the past 12 months. Obviously very good. Unfortunately, for the next 12 months, we're projected to see revenue growth of minus 45%. So don't love that there, but unfortunately, profitability metrics look bad. Obviously, this company isn't profitable, so you probably could guess that. So we have a gross profit margin of minus 201%. For those that don't know, gross profit just tells you what a company makes for what it sells. It's simply just a revenue minus cost of goods sold. So 201% is a pretty low number and signals that this company, really does need to improve on its profitability. And then cash per share. So the company has $6.64 in cash per share. That's roughly 10% of the market cap in cash per share. So that's good to see there. Definitely have a good amount of cash on hand. Now let's take a deeper look at that balance sheet. So we have $1.7 billion in cash per share, or excuse me, in cash on hand for this company. And we have $241 million in debt for this company. So that means that we have $1.5 billion more cash than we do debt, which is obviously a positive. So given this company isn't profitable, given this company is burning money every year, in fact, we have a net operating cash flow of minus $277 million per year. It's great to see that we have, $1.5 billion kind of in the bank just to fund the future operations of this company. So that is very important. Anytime you have a company that isn't making money, you always want to see that it has enough cash on hand to, improve and move its business towards profitability, which I think CRISPR definitely does have the opportunity to do. And then with that being said, let's take a look at the chart here and give a price prediction. So as I've been very clear on this channel, I think more markets unfortunately see a tick lower over the next couple weeks. Therefore, I believe we probably see CRISPR move lower. It's also worth noting that we are overbought according to RSI. The last time we were overbought, we saw a move lower from about $59 to $50 over the coming trading days. Therefore, I believe we see a similar drop from overbought conditions, and we see a move lower down to support at around $59. I call this level support as this is where the stock had topped out in November. It's also where the stock had topped out in July. It's also where the stock had topped out in February. So massive level of resistance should act as new support for the stock. So I think we come down to $59 support, and we hold this level and move higher over the coming months. And my price prediction is we end up moving higher to about $83 over the coming months to years, really. Really shouldn't say years there. That's kind of more of a 6 to 12 month price prediction there. So thinking that we come down to support at 59, hold this level and move higher. And then I'll cover the seasonality trends for you folks. So this shows me in the 6-year history of the stock, which months does the stock perform well in. Well, we can see in November, shares do typically rise 5% on average. So one of the best months that we are in currently. But it is worth noting that December is the worst month in the stock's history. So on average, shares decline 12%. So don't be shocked if we see a red month in December once again. So like I said, I think we come down to support around $59 and we move higher over the coming weeks. Long term, I think the stock has massive upside potential. It's just really a matter of, is this stock worthy of your capital? Does it make sense for you to own the stock? If you're closer to retirement, I would say no. If you have, 15, 20 years, even 10 years to kind of let this investment play out, I think it's a good investment. But with that being said, I hope you enjoyed this video. If you did, please leave a like and subscribe. And I'll see you here next time.